This channel is for educational purposes only. Make sure you do your own due diligence before making any investments, and there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi, this is Joe. We're going to talk about the market today. Going to get into the S&P, the QQQ. Going to take a look at the Russell. I want to look at all the market conditions and talk about a specific another trade that took place in the indices. And just want to make mention that I was on Stock Charts TV yesterday. It still should be out there, and especially they have an on-demand way of watching their shows now. So look that up. It might be worth a 10-minute look at my video there. And also, I want to mention that I'm going to be on Catherine Murray Media and Markets tomorrow. I'm going to do an interview, hour-long interview. We're going to talk about different stocks, talk about the markets, stuff like that. I've known Catherine for a very long time, and she's a very good market person, and I'm looking forward to doing that. So I just want to make sure I mention that. Let's get into our let's go ahead and get into the market conditions right now, and want to pretty much just really just give you a quick update. The volatility has gone to negative. We are now if you look at this indicator, this is the average true range of 20-period average true range of the S&P on a daily chart. It is now above a rising moving average. I use an 18 MA. And so that to me is a sign, again, that the risk levels are elevated. I'm going to go into the trend and momentum and show you what I'm thinking there. But I just want to make sure I cover these real quick. So overbought, oversold. We are getting down to around 43% for the RSI 5 for the S&P weekly. There had been divergences I had mentioned a few times. And so, I wouldn't be surprised if this wants to work its way all the way down towards the 30-35 area before it actually reaches some kind of a bottom. But either way, I think, we're working our way down from what was a pretty overbought condition to now we're quickly working that off. And as I mentioned last week, that to me is good news. If you can work off an overbought condition somewhat quickly and get the sentiment number down, I want to see the sentiment number get even lower. I'd love to see it actually get into the 20s if we could pull that off and still maintain the trend. But with risk levels elevated, I'm going to show you why I don't think you have to go diving right in to the market once we get into the trend and momentum. So that's kind of that is sort of the overview there. Let's go ahead and look at the S&P chart. I've been mentioning how I'd like to see this work its way back down on a monthly chart, get a little bit closer to the 18-month because it had gotten a little stretched away. The weekly, again, what we had talked about based on the fact that we were seeing that RSI divergence, the fact that MACD was starting to show the potential to cross over, and DI, green DI, which shows the strength of the buyers, starting to show a little bit of divergence there, that there was a very high probability wanted to come down and test the 3,700. We've basically done that. So now we have to sort of evaluate how good is support here. And, I think it's a little early to make that call because if we go and look down at the daily chart, what we've done here is we've broken the trend line. And we broke the trend line actually last week, and then we've got a little rally that tested, and now we're going to a new low. So to me, that's a 1, 2, 3 shift in trend. It is sort of presumptive evidence. You probably really need another lower high and a lower low to really confirm that you've got a downtrend in place. But to me, it's enough evidence, and that's why I switched the trend on the daily to negative. Even though the 18 is still above the 40 on this time frame, the 18 has turned over. And again, price is going to give you a signal quicker than the moving averages as well, especially when there's a lot of volatility. So you want to keep that in mind. This is why I always do the analysis based on both price, trend line analysis, as well as the moving averages. If we look at what took place, though, on an ADX basis, we had the red line cross over and now hold. For the first time in several months, we got a cross and hold with red, meaning that there was enough strength on the sell side that even during the rally up to the 18, you couldn't re-break or get the green back above. And now we're making a new high in red. So it somewhat confirms what we're seeing in price. Again, it's the first time we've seen this in quite some time. So I don't want to jump to any conclusions and assume that 3,700 is going to hold just based on the conditions here. I think we have to, be ready and see how things react. But right now, I would be giving this a little bit of breathing room, especially based on what I'm seeing on the hourly chart. So the hourly chart has made another new low. We got a lot of strength. ADX got over 50 on this time frame. So we're short-term oversold, probably due for some kind of a rally. But at the same time, as long as we're making lower highs, and in fact, the way I would look at this now is I would probably be drawing in a downtrend line this way. And now I've got sort of a downtrend in place. And until we can reverse this trend pretty much on the daily chart, we want to see this get back above on a daily chart. I think you have to have somewhat of a negative bias. Now, if we get far enough away on the shorter term timeframes and you want to play a move back up into that trend line, I'm talking about this downtrend line now, then you can do that. But it's going to take a little bit of time and a little bit of work to get even the micro timeframes to turn around. So that, I think, is a pretty good way to look at this right now. Let's go ahead and take a peek at the QQQ. As I mentioned before, this had more room on the monthly chart. It still has a decent amount of room to come in before it reaches any kind of support on like the 18-month line or this prior support area. And that is somewhere around, say, 265, maybe 270, something like that. That's if they really get this going to the downside. Keep in mind, 300 is price support, and we came down pretty close to that today. In fact, it's showing that it actually came down and pretty much touched the 300 level. So we'll have to see how it reacts here. But again, look at the volume action. Very strong. I mentioned this last week, strong volume to the downside. And look at what the ADX is doing for the first time in this whole move for several months, and certainly for the first time this year. We got a strong crossover of the red, took out both green and red here, and then held on the downside with ADX crossing over 25. So to me, this is a pretty strong confirmation that the trend is, for now, is on the bearish side. We're just going to have to see how it reacts at support. So let's take a quick look at the hourly chart, because I want to point this out. If you notice, actually, let's look at both the daily and the hourly together, because what took place is a trend line break. So on this time frame, we break the trend line, we come back up, and we do some form of about a 1/3 of a retracement to give you the 2 on the 1, 2, 3 change in trend. And on that 2, on the way up, we held on a DI basis, as I just mentioned, as ADX is crossing above 25. We also had a 2-bar rally, 2 higher lows, where you had a little pinch develop on the MACD. So, and then we go and we look at what happened on the hourly chart. Hourly chart was down here, made sort of a double bottom, and then look at this rally. It was strong enough to cause our opposing trend pattern, where the 18 crosses back above the 40, and that price was above both moving averages. That sets up the condition for a short on a recross of both of these moving averages. This is the pattern that's right out of my book. I mention it several times in numerous videos. Most of the time, what we've been talking about is the long side of this pattern, but it happens on the short side a lot. The beautiful thing about the way this set up is that when this was basically in place, we had a zero line reversal pattern. Again, that's another pattern out of my book. And when this crossed to the downside, that was pretty good trigger as price is sort of starting to work its way back down through the moving averages. The way you know you have a good zero line reversal is a lot of times you'll have a low ADX in conjunction with that signal. So this will be right around the 0 line and reversing, and we'll have a low ADX signal. When that takes place, you want to take the trend line break as your trigger. So that's how I would play that, and it had a really good signal, nice follow through to the downside. You probably would have been taking some profits, especially as this spiked down today. And doesn't mean you take the whole profit, but it's always a good idea to be scaling out. So that kind of covers the QQQ. Let me take a really quick look at in fact, I want to look at the Russell. Sorry about that. I want to look at the Russell again, with just a single chart in the relative strength, because what I mentioned about the Russell is that it was very strong, and here it is relative to the S&P, making a really strong move. But what I mentioned a few weeks ago when I talked about this is that it should be due for some kind of a pullback relative to the S&P, meaning this line should keep pulling back a little bit closer to its moving average. And the reason why I say that, I've studied this ratio for a long time, meaning the Russell versus the S&P. And when it's leading, it will lead to the downside too, meaning it'll have deeper pullbacks than the market, but then I would expect another strong move to the upside after that resolves itself. So we just need to work off this overbought condition in the Russell, and there should be a lot of opportunity and to be on the lookout for long side trades, especially kind of bigger picture patterns as this starts to stabilize again. That's our update for the week. Remember to keep an eye out for me tomorrow on Catherine Murray's YouTube channel, and hit that subscribe button if you haven't done it already, and we'll talk to you next time. Thank you.